Yo, what's up, everybody? It is Monday, August 26th. August almost over, folks. Unbelievable. So we had a mixed day today. Dow was up, S&P, NASDAQ down. Today's going to be a big week fiscal flow-wise because we have a Social Security payment on Wednesday. And we have first of the month payments, September 1st of the month payments coming out basically on Fridays the 30th. So it's going to be a big flow week. So most likely we will see new highs in the Dow and the S&P. I'm not so sure about the NASDAQ. This is all being, flows or liquidity driven. But we also have a lot of momentum from the monetarist zombies who are, they're all excited about the Fed rate cut. By the way, next Friday, not this coming Friday, the following Friday, I think that's September 6th, if I'm not mistaken, we will get the August jobs report. I haven't looked at the forecast yet, but from what I understand, from what I've been reading, Powell, in his speech at Jackson Hole last Friday, he kind of set a low bar for a 50 basis point. Right now, the market is not pricing in a 50 basis point rate cut in September. Just, let me state that. The market's pricing in a 25 basis point rate cut in September. But if it's a weak number in that job report, there's going to be a reaction. And the reaction is going to be skewed towards the monetarists thinking, we're going to get a 50 basis point rate cut. Now understand something, folks. I'm looking ahead, okay? I understand all this and this momentum on the monetarists are, they're excited, they're bullish, they're buying. And people who have been on the sidelines for the whole last couple of years, they're buying now. I get that. I understand that. I'm giving you the perspective when these rate cuts start to have their effect. I mean, it's the same thing I was given the perspective on back in, 2022, when I said once the initial negative impact to the rate hikes occurs, you're going to reach an inflection point where the fiscal transfers, the interest income transfers, are going to offset and exceed and outweigh the negative impact of the rate hikes, which is the rate hikes basically were a discounting of forward cash flow. Okay, the leading flows, the interest income transfers, that's real money flowing into the economy. So like now, I'm giving you perspective 3, 6 months, a year ahead. So you might look at this saying, market's going to skyrocket on these rate cuts. And we might have a blow off top here on these rate cuts. But I'm telling you now what's going to happen by the end of the year, and especially in 2025, the way things look right now. The way things look right now, which is what I've been talking about for the last several weeks. I mean, the rate cuts, reducing these interest income transfers, number one. Number two, the smaller increases in cost of living adjustments for Social Security, Medicare, Medicaid, military pay, veterans benefits, blah, 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 etc. The expiration of the Trump tax cuts, if those aren't, extended somehow, we have to see who gets elected and what the economic proposals are, what the economic policies, what passes. But right now, I'm telling you, it's cool if you think like someone's giving you what's going to happen tomorrow, which basically there's a 50-50 chance going to go up, going to go down. I'm giving you the macro picture, the big picture. How many times have I said, you got to fly over at that 30,000 foot perspective? That's how you accumulate wealth. That's what makes you rich. This in and out. I mean, that's for players. That's for people who want action all the time. I've made that distinction so many times in these videos that I've done talking about what the real motivation for most people, even though they think the motivation is making money and being profitable, the real motivation is action. They want the action. They want to sit there with 50 screens plastered on their wall. They want to see every chart. They want to see the CNBC stream going in the background, Fox Business stream going over here. They want a ticker going past. They want the tick charts. They want 5-minute charts. They want hourly charts. They want 4-hour charts. They want daily charts. They want weekly charts. It's like, come on, seriously. I mean, they want to be glued there. No lunch, no nothing, no life. You know, how many, I've given this example. What's his name? Citadel. Can't hold a candle to Warren Buffett. Warren Buffett, I guarantee he's not sitting there looking at a screen all day long. So I'm giving you the outlook. I'm giving you the 30,000-foot outlook. I'm giving you what's going to happen through next year. Like, who's doing that? I'll tell you who did that. They did that in 2022 with all these genius Wall Street analysts telling you there was absolutely 100% going to be a recession in 2023. And who told you otherwise? Yours truly. I said, as long as they raise the debt ceiling, these were my exact words, as long as they raise the debt ceiling, the market's going to go to new all-time highs. And now I'm saying the rate cuts, while it's a party going on, woo-hoo, among the monetarist group, it's not going to play out the way they think. It might play out, for a few weeks or a month initially like that, but I'm telling you right now, it's not going to play out the way they think. So anyway, it's Monday, start of the week. Not a lot to talk about, really. Let's see how the week goes. Again, it's going to be a big fiscal flow week. We got Wednesday, Social Security payment. We got Friday is the first of the month payment, so big flows this week. We're going to have a positive bias in the market this week. Oil, I told you guys when it went down in the low 70s to buy it. It's back up, 77, 78. Producers are sellers at 80. So it gets up around there. It's going to go back down again. We're in a range. Okay, the longer term fundamentals for oil right now, from what I see, supply demand wise, still bullish. Producers are net long oil futures. They've been that way since May of 2023. That's a very, very unusual net position for producers, but I don't argue with that. I've said many times, I don't go against what the producers do because they're the most savvy players in the markets. They see what's going on. They got their finger on the pulse of the market, so they understand it. They're in the business. They produce, they extract, they merchandise, they commercialize oil. They know what's going on. They know what their customers demand. They know what they're producing. They know what's out there. If they have to procure supplies for refineries or whatever, you don't go against these guys. Gold, new high. You sell into the new highs. Producers are short. Banks are short. They've been buying on the pullbacks, but they keep increasing their net short position. Every time it makes a new high, if you want to trade it, scalp it, you sell into those new highs. You're going to get a pullback. You cover on the pullback. You go long for now. Eventually, once the rate cuts hit, that is not bullish for gold. The reaction right now, that's the monetarists thinking, oh, rate cuts, bullish for gold, blah, blah, blah. How were the rate increases? The rate increases were super bullish for gold, okay? Nobody's talking about that, except I told you that was going to happen. Just like I'm telling you right now, the rate cuts are going to end up with maybe $1,600 gold price at the end of the day, depending on how far it goes and to what degree the economy goes into recession, all right? Anyway, that's it for today. Oh, man, I forgot. Don't forget, please like and subscribe. I got to say, the amount of subscribes, I mean, I'm just really touched and I'm really thankful. It's gone way, way up. Thank you guys so much. If you've already done that, thank you. If you haven't, please like and subscribe. It's really, really helping out the channel, and I appreciate that so much. Love you guys. All right, don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.